Okay, good morning, everybody from sunny South Florida. We are here today on Investing Across Borders with my guest, Charles Carillo from St. Petersburg, Florida. Charles, is that where you grew up as well?
No, I grew up in Connecticut. I've been in Florida since 2012.
Okay, cool. So you're probably happy to be here at this time of year, right?
Yep, since we got like a foot and a half of snow just a few days ago up there.
I know, I know. I actually have an extended family member who bought her husband for Christmas one of those tractors that cleans the snow. Okay, they live like he's a periodontist, right? And they live somewhere, I'm not exactly sure, in Connecticut, but they got like pummeled with snow. So he was the most excited person because he got to use his new toy to clean the snow. And I'm thinking, I don't miss that stuff for a minute. As you can see from my background, I'm originally from Canada. But now that I'm in South Florida, I don't miss the snow for 1 minute. Honestly, I could see it. Like if it was outside and I could see it for a minute, I'd be okay with that. But I'm done, I'm done. Enough years spent in the snow. So anyway, so Charles, tell us a little bit about yourself. And you've been here in Florida since 2012. You have your own podcast. Tell us a little bit about that, and let's see how we can bring some value to our listeners today.
Yeah, so I'm a multifamily investor mainly. I've started investing in multifamily since in 2006, and I self-managed some properties I had in Central Connecticut. I haven't professionally managed now. I've been down in Florida since 2012, and we're doing larger projects down here now. And like our last deal was 90 units that we bought in Tampa with some investors. We work a lot from what I did for years prior. My brother really manages that whole business now. I ran a payment processing business, and I had a lot of clients in Europe, mainly Eastern Europe. So I would spend 2 to 3 months a year over there working with these clients and partners. And they would always ask, what else you got going on? What's going on? And they'd ask me about real estate. And then they'd ask how to invest. And I was like, I have no idea how you would do it. I know, I just went through all of the benefits that we get as US investors, right?
Right.
And so it was like, okay, like this is like going to be something when we work with, when we're doing deals. I have a lot of investors that come in that are expats, or some of them are foreign nationals. I have that in my last deal, actually. And then you have some people that are just US investors. But what I do is that most people will reach out to me, have questions about it. I'll bring professionals on my show. And it's something where I usually point them back to someone like yourself, Lauren, that can actually answer the questions. And I kind of point them in the right direction. Hey, here's someone that works that can help handle financing for you. Here's this over here if you want to be active. And then obviously, if they want to be passive, it's another conversation that we can have.
Absolutely. Yeah, a lot of people don't realize that there are two conversations to be had. One is active and one is the passive conversation. I deal more with the active investors in my business just because I'm working with them to get them visas very often. But passive investors on the real estate side, I'm also a real estate coach, is definitely something that we work with on a daily basis, and that's going to grow because I'm sure you would agree with me with all of the forbearances that are going on. You're in kind of north central Florida, and I'm in southeast Florida. But with all of the changes that are going on in the forbearance and mortgage industry, there's going to be a lot of distressed properties coming on the market. Now, I hear people saying that it's not going to happen that way, but I think it is because people are just right now they're keeping their heads in the sand so far. That there's going to be a new president, no matter what the current president says, it's going to happen, whether we have to pull him out by kicking and screaming. But there's going to be a lot of changes, and there already is. And I think that a lot of people, and I see it up there. I've spent a lot of time in Central Florida, and there's a lot of businesses that are unfortunately going under, and there's a lot of people that are not paying their mortgage. Now, right now, they're still under the radar. But that's not going to continue. And I specialize in subject twos. That's why I'm bringing this up. So there's a huge amount of opportunity, not only on the side of getting access to these properties, but also on the positive side of taking these people out of their traumatic, potentially disastrous credit situation, foreclosure, when we come in. So I would think that that's going to also bring people to you in your syndication business, because you're going to be making additional investments that meet your profile, and then they're going to be relying on you, right?
Yeah, so it's funny that you bring that up because Florida is like the ninth state out of for having the most forbearances and not current. I think we're like about 8.5% of all mortgages, and that's a 1 to 4 unit residential side that are in forbearance right now, or they're not current or delinquent. However, they're putting it, they're not paying their mortgage.
Right.
And with a renter for us, that's an eviction moratorium, if which is very minimal right now, which is actually kind of interesting. But what we're doing is that they're not going to catch up. We know they're not going to
No,
catch up. So
they
when it's all
can't.
done, yeah, when it's all done, they're leaving, and that's what it is. And
Right.
with the forbearances with the bank, you can become, but someone that couldn't pay their mortgage in March, they're not paying their mortgage in
And
February.
they're definitely
And
not going to be paying the 10 payments that they owe. And
that's
that's the
exactly.
biggest challenge. And people don't
Mhm.
realize, like, I'll be honest with you. I took advantage of the forbearance because I thought, okay, I'll be able to delay the payments. And then all of a sudden in September or something, I had 5 payments due at once.
Yeah.
That's a big hit. And not everybody can do that. It wasn't easy for me. I mean, you have to come up, if you're already in a position of having to delay your payments, that's only going to escalate and the payments are ballooning. In Canada, it's a very different system because they're having mortgage forgiveness, or they're putting the mortgage payments at the back end of the
Right.
mortgage, which is what would have made more sense here.
Yeah.
But
Yeah.
unfortunately, that's just not the way it worked.
Yeah, it would have been better to, like, what they did with a lot of mortgages in '08 is they made them from 30-year to 40-year mortgages,
Right. Just
which
extend it.
right, which was something that would make more sense. And there's probably so many reasons I'm aware of for residential mortgages why they did that, but it would make sense to tack them on the back. And that's how usually, if you called your bank, because I had commercial mortgages, I had residential multifamily mortgages, and no one had any idea what was going on in March, right? So I called all my
Do they
banks, right?
now? I mean, let's be honest. Let's think about this. So, the other day, my mom. This is my mom. I was supposed to be in Toronto now, okay, and decided not to go because my mom's like, "Oh, this is almost over," and blah blah blah. And I'm like, "Well, I still really miss you. I haven't been home in a year," and we were just talking about how this can't go on much longer. This just can't go on much longer. And then you look at the other side. In March, did we have any clue that in December at Christmas time, when we were about to go into a new year, through the whole election, into a new president, we have still coronavirus. Now
Yeah.
they're starting to administer the vaccines, but it's not widely available, and there's a lot
Yeah.
of panic about how that works and do you want the vaccine and everything. But it's just like a crazy thing because in March nobody knew what was going on. And I got to be honest with you, here we are at the end of December. Not a lot of people know what's going on,
Right. Right. And
especially
that,
in the real estate world,
mm,
right? Like, you're seeing like these ebbs and flows and a lot of volatility. I don't know if it's the same in the markets that you're working in, but certainly in the markets I'm working in, the tax auctions are closed, and there's gonna be a lot of backlog there. I mean, there's just so many changes in our industry, right?
yeah, the other thing too, though, is that people aren't noticing is that the prices are being elevated so high right now. It's a lot because there's a lack of supply on the market right now. And when people start moving again normally and all this other thing, it's going to be something where when people can't hear you, when people can't when people can't hear, is that fine? I'm sorry. I'm
A
sorry.
little closer, sorry.
Is that better?
Yes.
Okay. So if people aren't aware exactly of, I kind of lost my track of thought there, but where the problem is that when people start moving again and you have more properties that are coming on the market along with the properties that are now leaving, or being foreclosed on, there's going to be even more supply in the market because people are going to continue what they were doing in 2019, which is moving, which is selling their properties, which is buying their properties, and everything like that. So I think that's going to be something else that adds to the whole pile of what's happening.
Yeah.
But even they didn't even know about the one with going back to like the forbearances. When I would call banks, and I was like, if I need to do this, everything's fine right now, but if I need to do that, and I didn't have to do it, but it was like they were like, well, you just pay your escrow. And then I would call in like a week later because you just don't trust anybody. And they're like, no, if you don't pay the full amount, it all goes in. And you're just like, oh, okay. So you're not even like, and they're like, it's going to go on the back. And then it's like, no, 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 you have to then catch up on it.
Right.
And then it was just like, and you couldn't even get through to the banks to hear it. And then with that problem, I mean, you're on hold. It was complete chaos. So at that point, you're just like, I hope I don't have to, because anything that you're told, it's not 100% correct. So
A
it's
100%. And you can't still still there's just so much upheaval. I mean, we just got a new stimulus bill, what, yesterday, I think.
Mhm.
And that, so now it's like, okay, well, what does this mean? Can we get access? I was helping people at the beginning of COVID access all of the SBA money and the PPP and so on. And now it's like, well, how do we get access to this? And there's for every issue, there's 25,000 opinions, right? And it's been very challenging because here we are, some states are on lockdown, others are not. What does that mean? And then there's so much talk. Like my mom thinks that we are just running around getting viruses like every minute of every day, right? Because she's in Canada. And she's like, you need to come home. Like every day she's, and it's a new story. Like the other day she writes in capital letters, come home now, on different lines. And then she says, don't come home. So there's just so much pandemonium. Now, the beauty of it is, just like in '08, although there have definitely been some blips for the real estate industry, at the end of the day, no matter what, real estate is always cyclical and it's always going to come back. The cruise line stocks are probably not coming back for a long time, but real estate is good and real estate is solid. Okay. I'm with a real estate company, it's cloud-based, EXP. And we have gone like gangbusters because we are not driven only by real estate, but also by tech and by diversification. And that's, I think, one of the lessons, wouldn't you agree, that we've all learned in this is that you can't be fully invested in any one thing. You have to diversify. You have multifamily, you have multiple investment streams and income streams, and that's how you're going to be successful. So tell me a little bit about how you market to international investors. Is there a special marketing approach that you have? How does that work?
Well, what we do is I have the Global Investor Podcast, which is similar to yours, but much more with passive investors. And then when we used to be able to travel, for example, I would spend 2 months a year for my wife's work in Hong Kong, and that would be something where I did all types of meetups over there with meeting
Sure.
with people, and that's a completely different, getting into, just like you're saying, Canada, a completely different mindset of someone when you're talking to them, when they're talking about what they hear from the United States. But and people have, I think a lot of people out there don't understand what international investors are looking for the most part. I mean, you have some of them that are looking for a higher rate of return. You have a lot that are looking for a safe place to put money, and there's a lot of places in the world that you can't just cash flow on property, right? You
Right.
cannot make that positive cash flow every month. It's very small, or it's negative, and you're
Or
just
it's
hoping for
restricted also, or
right.
it's government, like the government steps in and doesn't even allow you to have access to the income.
That's a good thing. Like in Sweden, I have an investor from Sweden, and he has some properties there. And then what happens is that his increases on rent have to go through the government. So the government tells
Yeah.
him what he can increase the rent to. And that happens in a lot of these, especially Scandinavian countries. And that's something in the United States where you can make your deal on your renewal with your tenant. And you work it out among you without
Right.
having government, which obviously no one wants to have government in their business as much as possible, right?
Unless you're in Scandinavia or Canada.
Right.
Um, what what excites you most about dealing with international investors or people that are looking to invest from other countries, for example?
I think it's opening their eyes to the possibilities here in the United States that aren't available in other places,
Yeah, like
and that's a huge thing, because people ask you and you're like, oh, and they're always asking questions, and then they're like comparing it to maybe what they've heard, they've read, or it's always somebody's always got a family member that was a landlord or something
sure.
that got the call at 11:30 p.m. one night over their 10-year period, and hates doing it afterwards. And it's kind of saying there's different ways of investing, like you were saying. There's multiple income streams, different ways of going about it. I mean, if you want to deal with just single family properties, and then you have someone there that manages them for you, if you want to go with a little smaller of a small multifamily like apartment building. So there's different
Yeah.
ways that will, for your risk tolerance, that you can get involved with. And then really just aligning yourself with professionals that are seasoned, whether they're licensed professionals like yourself, or whether I'm a licensed real estate agent in Florida. I don't really use it for that purpose, but it's something where as to I can now have access and I can tell investors and speak to other people about different investments and kind of what's happening and what you can foresee for the future with where we are. So.
Sure. Yeah. So you mentioned earlier about the benefits of investing in US real estate. Can you list the top three benefits that you would say you are seeing on almost every project you work on?
Well, the U.S. has we're very friendly with depreciation, which is great when you're investing into cash flowing real estate, where you're able to kind of push off its paper losses, so you actually will make money. But actually, when you're filing, it's a K-1 that gets
Hmm.
filed. When that gets filed, it actually comes up as a loss, and when you're giving it to the government, so that's a huge plus. It can offset some income, and that's a big thing for a lot of investors, so you're actually getting money and you're actually not paying taxes on it. The other thing would be that we have a lot of long-term fixed debt here in the United States.
Hmm.
And in some areas, in some countries, it's similar to that. In other countries, it's not. It's a much shorter time frame. So a shorter term on it, which can be, it's just riskier. When you have shorter term debt, it's just a riskier proposition, in kind of staying up night, kind of worrying kind of thing that you don't want part of. And then the other thing too is having the ability to actually cash flow and make a cash on cash return that's actually over inflation, right?
Right.
5, 7, 8, 10%, whatever it is, where in certain countries it's 1 or 2%. And then you're just like, well, I'm really just investing for appreciation, which is just a gamble, right? At that point, if you're not flipping the property, it's a different,
Mhm.
it's a whole different business. But
Do you see a huge difference when you're dealing with a US investor versus a foreign investor in terms of, first of all, their approach and their expectations?
I think the return expectations are lower among foreign investors,
Yeah.
and especially if they're coming from a country that's probably not as stable. Maybe it's different from coming from Canada, but for
Right.
investors I have from former Yugoslavia, or from China, or from Hong Kong or Macau or something like this,
Mhm.
they're coming from is not as a stable of a country. I guess you would say. I mean, those countries are pretty stable, but you're coming from a country that it's first of all, after you get the money out of the country, that's a huge hurdle. Argentina is a huge thing too. So they're coming and they're just trying to like,
Venezuela, right?
right, right. They're just trying to keep their money, right? They're
Yeah,
just, I mean, so that's the thing too, is you're being in South Florida, so much international money comes in
so
there.
much.
And that's something where people always ask me, oh, I'd love to invest in multifamily in Southeast Florida. I'm like, I would love to. It's just something that everything I see a deal from, there's a cash buyer that comes from like Venezuela
Yeah,
or
big
Colombia.
time.
And that's just what it is. They're coming, they're buying these unfinished condos in Miami and all these different things. But the thing too is that if you were in Miami, or it's like they had one of the best tennis players in the world. He's from Serbia. First thing he does when he gets his first paycheck is he buys 2 penthouses in Miami and one in New York. I'm like, he's not leaving his money in Serbia, in
Right.
dinar. He's bringing it here, and no matter what happens, it's going to be something where a large percentage of that's going to be left, even if it loses a few percent or he's paying management fees. He doesn't care. He just wants to have his money and not
Safe.
lose it. Yeah,
Right.
exactly.
Yeah, definitely a big part of it. And you're right, for Canadians, we don't Canadians just, generally speaking, money
Yeah.
is pretty safe in Canada, and we have we're able to come and go with the money as we please, unlike in Venezuela where a lot of countries where there's currency restrictions, there's
Mhm.
export restrictions, you can't bring a certain amount of cash out of Brazil. My sister-in-law is Brazilian, and we are
Oh,
always so. And of course, as an immigration lawyer, dealing with source of funds is so
mm.
different from each country, which you
So,
have to probably have the same. You have to show where this money comes from, so you don't have
mm,
money laundering issues when the money's coming
mm,
into your syndication. There's so
exactly.
it's the same concept, and you're always, Russia. There's just countries that have different disclosure requirements, and the mentality, the culture, as you mentioned, is different. Our culture, especially Canadians, and obviously at the end of the day, I'm born in Canada, I'm Canadian. We over disclose, right? We're very conservative. We're very cautious as a rule. Um, and and when I say conservative, I mean small c conservative. Americans, much more live on credit, take advantage of opportunities, not as willing to disclose, but they are required to disclose. And each year you have to file taxes, and you have to, and there's rules, and there's rules of law, there's rules of engagement, and there's rules of culture. And the cultural differences between us in North America, and even between Canadians and Americans, because Canadians are much more risk averse. I'm sure you've seen that in working with, right?
Yeah,
We are
that's
like,
true.
well, are you sure? Like, how safe is this? Because we are, like I said, conservative, small c conservative. Americans are much more inclined to take risk and face fear. So that's a big difference that I see on a daily basis, certainly working with Canadian and American, and for that matter, investors from literally everywhere in the country. So what are some of the biggest mistakes that you've seen investors make over time?
Not having their tax and legal structure set up. And that's
Oh
like,
my God, so true.
and I'm like, and they're talking to me because I'll do like a free 30-minute call with people that listen to the podcast. And I'm just like, they're just like, I'll answer any questions you have. And I'll be like, listen, this is probably what you have to do, but you need to you have to find this, you have to do that. And when it gets down to that part, how difficult that is, I imagine you coming as being an attorney. It's just something that, the nightmare that must be on the back end, as myself being on the front end, being like, wow, you've got a major problem and you have to speak to people. But it's that you can't, especially with their taxes, especially like the estate tax and stuff like this. And we have a $12 million US citizen. It's $60,000 if you're a foreign investor. These things like this, you have to know up front, because if you're going to make a meaningful investment in the United States, you have to know everything like that. And then you have to be set up. You want to be set up if you have money you're investing, you want to be set up correctly. If it's a trust, if you have a lot of money, if you're setting up through an entity, if you want some privacy and some protection. So everybody has their own thing, but I think it's a tax and legal structure. Because that's when people reach out to me first, like, oh, I want to do this, I want to invest, whether passively or actively. I'm like, listen, CPA, attorney, like, get that done right away, that know what they're doing, like worked with foreign investors before.
Right.
And
That's
then
critical.
right, and then
That's critical.
we can continue our conversation after
Yeah.
you've got that kind of going, right? Because what are you going to do if it's not set up correctly? You're trying to get make this investment as advantageous as possible for yourself. And I wouldn't doubt you should. And it's something that if you don't have it correctly set up, you're going to be in trouble.
I see so many real estate investors from everywhere that invest in their personal name here in the US.
Mm-hmm.
And the potential liability alone is so huge in doing that. Even when you're investing in a syndication, which is more passive, you want to do this through the proper structure. And I see a lot of people that are hesitant to spend the little bit of money to consult with that lawyer and that CPA. So in my process, for example, one of the first steps every single time, no matter what, is to speak with not only a CPA that's US licensed, but also that understands specifically the tax treaties and the tax requirements for that foreign country. So I
Exactly.
have specialists on my team, for example, that are like that understand the tax rules, or are licensed, dually licensed in Russia and Brazil and Argentina and Canada, you name it. And that's super important, because you can't just invest in the target country without considering how that's going to impact your home country.
Right.
So, how long have you been investing in real estate?
I've been investing since '06, so
Okay,
going on 15 years.
15 years. Cool. And did you have a full-time job when you started investing?
No, I was I've been self-employed, and in '06 I graduated college, and my dad had been investing in multifamily for years
Okay.
beforehand. So he kind of pushed me and pushed me and pushed me to do it. Didn't really want to do it right off the bat. And then I really got the bug after that. And it's definitely been a great investment.
Yeah, everybody that is a real estate investor is thrilled with the opportunity, with the returns. I mean, you're going to have a few failures in the process, no matter what, but it's only through failure that we can know what real success is, right?
True.
So, Charles, how do people reach you?
So if you have questions, if you're interested in investing actively or passively in U.S. real estate, please reach out to me. You can set up a 30-minute call with me if you just go to schedulecharles.com and set up a 30-minute call that fits on your schedule as well as mine. And yep, look forward to speaking to anybody that's interested in investing in U.S. real estate.
So I just want to ask one last question. I don't know if we clarified this. How many cities are you currently invested in?
Markets we're in currently, four different markets.
Where?
And so we're in Phoenix, we're in Central Connecticut, and we're in 2 markets in Florida.
Okay.
So we really focus when we're looking for markets that we have partners that are on the ground there, and we're
Okay.
looking for
Right.
landlord-friendly states.
Right.
So all in the Southeast, we don't want. I've done my time in the Northeast of investing, and that's very tenant-friendly. So it's something when you're looking for a place to invest, make sure that you know that market and and it's got the right population growth and job growth and all those different factors. So
Yeah. Yeah, absolutely. Well, I thank you for joining us today. It's really been a pleasure. I'm excited. I'm going to be on your podcast soon, so that'll be fun. And perhaps we'll have an opportunity to work with some clients together. I do often have clients that are looking for a turnkey investment opportunity, and it sounds like you definitely know what you're doing, and you've been successful at it. So thank you again, and I will look forward to speaking with you again in a couple of weeks.
thanks, Lauren. Talk to you soon.
Thank you. Bye bye.